Hi, I'm Brooke Thackeray. I'm filming this video Monday morning, July 10th, 2023, before the market opens. Just want to go over a couple things that are going to take place in the market this week, and the impact they could have on the market. It's a busy week for a number of reasons. I'm filming this video in southern Oakville, right down on Lake Ontario. Absolutely gorgeous morning. You can see how calm the lake is. Absolutely beautiful. Well, first off, I think the big economic announcement this week is probably going to be the CPI rate, the inflation rate expected to come out on Wednesday. It's expected to come in at 3.1%. Now, don't forget, we had the high last year in 2022, June, at 9.1%. So we've come down steadily from there. Now, Powell has said consistently that the target is 2%. So 2%, 3.1 is pretty close. So if we get a handle, excuse me, if we get a number that comes in at a 2 handle, so let's say call it 2.9%, investors really could cheer that number and go, wow, look, we're so close. And so we could actually see that really try to boost the market. But on the other hand, if we see the number come in at 3.9%, that could really rattle the market. But I think the big surprise could be in the market with a strong reaction if we come in with a really low number. So something we'll have to watch out for this week. On Wednesday, too, we had the Bank of Canada announcing their interest rate decision. Now, it's expected they're going to raise the rate by 25 basis points or quarter of a percentage point to 5%. In Canada, that makes a big difference because Canadians generally use a variable rate mortgage. And a variable rate mortgage, it's very different than in the US, where they use a 30-year term where you can lock in at any time when the interest rates go down. So Canada is different. The average rate typically in the past has been a 5-year term or less. And over half of the mortgages have some sort of variable component basically as well. So if we see a rate that goes to 5%, that's going to have a little bit of an impact. On top of that, the real estate industry in Canada is around 10% of the GDP. So that's a huge number. And to give you an idea, this is compares to the US, I think it's around 3%. So really has tripled the impact. And it also must be remembered that Canada is one of the most indebted nations in the world when you start combining the government debt, the corporate debt, and the private debt. So it could have a fairly large impact, basically. Wednesday could be an interesting day all the way around for both Canada and the US as well. Now on Thursday, we've got the PPI number coming out. That's the Producer Price Index. So we're looking at inflation from the producer side. And yes, it is related longer term to the Consumer Price Index. But in a rising market and an expanding economy or healthy economy that we've had, you can see a disconnect because companies are able to pass on their higher prices to consumers. And we've seen exactly that. And margins have increased. And that's actually a danger for the market coming up shortly because we've got high margins being made in the market compared to historical norms. And if we start to suffer a little bit economically, those margins will compress. And that will also affect the earnings per share for stocks as well. So it's going to be a key number as well to take a look at what's happening with the Producer Price Index. It's expected to show that the producer prices have increased by 0.4% on a year-over-year basis. So something to watch out for. I think inflation numbers are going to be important. There's no question about it. But I think investors really are, in the end, going to be focusing on the kickoff to the Q2 earnings season. And that happens on Friday with the banks reporting. So you've got Citigroup reporting, JP Morgan, you've got Wells Fargo reporting, BlackRock. And what you really want to see is you want to see the banks participating in any rally. It really shows a healthy market. And we haven't seen that, by the way. The banks actually, they did perform poorly in March after the regional banks had some problems. But they've continued to underperform. And so we haven't seen them participating in this rally. It would be healthy for the market to see them actually come out with some good earnings, good forecasts as well. But on the other hand, if they come out with some poor forecasts or increase in loan loss provisions, that could hurt the market. We'll have to judge that on Friday and the first few days of next week as well at the same time. Also too, right now, Refinitiv is predicting earnings to actually decrease on a year-over-year basis by 6.4%. Now, that's actually a hard number to measure because we're really coming off the COVID comparables on that as well. And the next quarter, Q3, is supposed to be positive, Q4 is supposed to be grow from there, etc. So this is really what I call the bottom of the barrel quarter for the S&P 500. I got to talk about the seasonality right now because this is where it gets important. We talk about the summer rally, the market performing well towards the late June and into mid-July. And in fact, on earnings months, January, April, July, and October, you tend to find the S&P 500 actually performing well because investors like to run up the stock market coming into earnings. But then they start to fade the summer rally. And in my book, I call that the earnings month effect, and that's the first 18 calendar days of the month and the earnings months. Also, I talk about the summer sizzler, which is a real sweet spot to that trade. It's the last 2 days in June and 5 trading days after Independence Day, which would put that on Tuesday this week. So we're in that transition zone. And here's why that's important. Because we're on a seasonal basis, the market tends to fade any summer rally it's had in the second half of July. And what we have is the two worst contiguous months on average over the long term, August and September. So these are not the pretty months for the market overall. This is when bad things can happen in the market. Yes, the market can go up. It typically doesn't have big gains in that period, and it can have some big drops as well. So that's the backdrop. So it's this inflection point that's coming up late this week and early next week is going to be really key to taking a look at what's happening with the market. So it's going to be a jam-packed week this week. Great week to be in the market. So it's going to be interesting, like always. Let's get back to our desks before the market opens. Thank you very much for joining me today.